Most people are taught to follow the traditional path to wealth. Get a good job, save money, buy a house, and invest in a 401k. But that's a slow and uncertain path to financial freedom. The rich don't get ahead by playing it safe. They understand that wealth is built by acquiring assets, not just earning a paycheck. Let's talk about debt. Most people are terrified of it, and for good reason. They've been taught that debt is always bad. But the truth is, there's good debt and bad debt. Bad debt keeps you trapped in the rat race. It's the debt you accumulate on things that lose value over time. Things like cars, clothes, and vacations. This kind of debt keeps you stuck in the paycheck-to-paycheck cycle. Good debt, on the other hand, is debt that helps you acquire assets. Assets put money in your pocket, even while you sleep. This is the kind of debt that the rich use to build their empires. They use debt to invest in real estate, businesses, and other income-producing assets. Now, I'm not saying you should go out and rack up a mountain of debt. You need to be smart about it. That's where financial education comes in. You need to understand how to analyze investments, manage risk, and structure debt in a way that works for you. One of the most important things I learned from my rich dad is that you should never be afraid of debt. The key is to use debt to your advantage. Don't let fear hold you back from building the financial future you deserve. Remember, the rich don't think like everyone else. They see opportunities where others see risk. They understand that leverage, when used wisely, can amplify their returns. But they also understand the importance of financial education. Invest in your financial education so you can make informed decisions and build a solid foundation for your financial future. Let's talk about the 3 types of income: earned income, portfolio income, and passive income. Understanding the difference between these 3 is crucial if you want to build lasting wealth. Earned income is the most common type of income. It's the money you earn from your job, whether you're a doctor, a teacher, or an entrepreneur. The problem with earned income is that it's directly tied to your time. If you stop working, the income stops. Portfolio income is the money you earn from your investments, such as stocks, bonds, and mutual funds. While portfolio income can be a good source of passive income, it often requires a significant amount of capital to generate substantial returns. Passive income is the holy grail of wealth building. It's the money you earn from assets that generate income without you having to trade your time for it. Think rental income, royalties from books or music, or businesses that run on autopilot. The rich understand that the key to financial freedom is to build multiple streams of passive income. They focus on acquiring assets that generate cash flow, even while they sleep. This allows them to live life on their own terms without being tied to a job. Now, building passive income takes time and effort, but the rewards are well worth it. Imagine waking up every morning knowing that your money is working hard for you, generating income whether you're working or not. Start exploring different ways to generate passive income today. Let's face it, our traditional education system is failing us when it comes to financial literacy. We're taught how to write a resume, but not how to manage our money. We're taught how to pass exams, but not how to build wealth. This lack of financial education is costing people dearly. It's the reason why so many people are trapped in debt, living paycheck to paycheck, and feeling financially insecure. The system is designed to create good employees, not successful entrepreneurs and investors. Think about it. We spend years studying subjects that we may never use in our adult lives. Yet we're not taught the basic principles of managing money, investing, or building businesses. It's no wonder so many people feel lost and confused when it comes to their finances. The good news is that you don't have to be a victim of this system. You can take control of your financial education and learn the skills you need to succeed. There are countless books, courses, and resources available to help you understand money, investing, and wealth building. Don't be afraid to invest in your financial education. It's the best investment you'll ever make. Remember, knowledge is power. The more you learn about money, the more confident and in control of your financial future you'll become. Challenge the traditional notions of success. Strive for financial freedom and the ability to design your own life. Financial statements are like a company's report card. They tell you how a company is performing financially, where its money is coming from, and where it's going. Understanding financial statements is crucial for anyone who wants to invest in the stock market, start a business, or simply gain a better understanding of their own personal finances. One of the most important financial statements is the income statement. It shows you how much revenue a company generated over a period of time, how much it cost to generate that revenue, and what the profit was. By analyzing the income statement, you can get a sense of a company's profitability and its ability to generate cash flow. The balance sheet is another crucial financial statement. It provides a snapshot of a company's assets, liabilities, and equity at a specific point in time. Assets are what a company owns, liabilities are what it owes, and equity represents the owner's stake in the company. Understanding the balance sheet can help you assess a company's financial health and its ability to meet its financial obligations. Finally, the cash flow statement tracks the movement of cash in and out of a company over a period of time. It shows you how much cash a company generated from its operations, how much it invested in its business, and how much it raised or repaid in debt. The cash flow statement is essential for understanding a company's liquidity and its ability to fund its growth. Remember, understanding financial statements is like having X-ray vision into the financial health of a company. Embrace the learning process, and you'll be amazed at how much more confident and in control of your financial future you'll become. People often ask me, Robert, what's the riskiest investment out there? They expect me to rattle off some complex financial instrument or volatile stock. But the truth is, the riskiest investment isn't some exotic asset class. It's a lack of financial education. You see, when you don't understand money, you're more likely to make poor financial decisions. You might fall prey to get-rich-quick schemes, chase high returns without considering the risks involved, or simply mismanage your money, leading to debt and financial stress. Think of it like this. If you were about to jump out of a plane, wouldn't you want a parachute and proper training? Of course you would. Well, navigating the world of finance without financial education is like jumping out of a plane without a parachute. It's not the investment itself that's inherently risky. It's the lack of knowledge and understanding that amplifies the risk. When you invest without understanding the fundamentals, you're essentially gambling with your money. But here's the good news. Financial education is the antidote to this risk. The more you learn about money, investing, and wealth building, the more confident and empowered you'll become in making sound financial decisions. Remember, knowledge is power, and in the world of finance, it's the key to mitigating risk and building lasting wealth. Take control of your financial education today, and watch as the doors of opportunity swing wide open. One of the biggest misconceptions about building wealth is that you need a lot of money to get started. While having capital certainly helps, it's not the only ingredient in the recipe for success. In fact, some of the most successful entrepreneurs and investors started with very little money. What they did have, however, was creativity and a willingness to learn from those who had gone before them. You see, raising capital is often about more than just having a great idea. It's about being able to articulate your vision in a compelling way, building relationships with potential investors, and demonstrating that you have the skills and determination to execute your plan. This is where creativity comes in. When you're resourceful and think outside the box, you can often find ways to bootstrap your ventures, leverage other people's resources, or structure deals that are mutually beneficial. Don't be afraid to challenge conventional thinking and explore unconventional avenues for raising capital. Remember, the most successful entrepreneurs are often those who can see opportunities where others see obstacles. Equally important is the role of mentorship. Surrounding yourself with experienced investors and entrepreneurs can provide invaluable guidance, support, and access to networks that you wouldn't have otherwise. Mentors can share their insights, warn you about potential pitfalls, and connect you with the right people to help you succeed. Embrace your creativity, seek out mentors who can guide you, and never stop learning and growing. Remember, the path to wealth is paved with financial education, smart decisions, and the courage to challenge conventional wisdom. Don't be afraid to think differently, embrace risk, and learn from your mistakes. The journey to financial freedom starts with a single step. Take that step today and unlock your full financial potential.